Well, the broad market's rebounding here somewhat after a report that the Boeing 737 MAX could return to service sooner than expected. Lots of investors say they wanted to buy that stock and others on a dip. So what are some of the big bargains that are developing after 4 down days in a row? What's enticing? Well, I got them for you, folks. Bringing in two of my favorites, Kingview Wealth and Management CIO, Fox News contributor Scott Martin, SureVest CEO and Chief Investment Strategist Rob Luna. I want to start with you, Scott, because I got a note this morning that you were intrigued by Boeing. You know, it's been all over the place, a 21-point trading range today, but it's over 320 right now, which is a place I was thinking could be a buy area.
Yeah, just a bit of volatility in Boeing and, pun intended, some turbulence, too, in the stock, certainly. But that's where opportunities pop up, Charles, as you noted. I mean, look, when you invest for return, you've got to take some risk. I mean, especially in today's markets with these levels. So what I think the deal is with Boeing is the following. A lot of the bad news is out. Calhoun is in. He is doing the right things. He's getting the right messages out. I think there's a lot of confidence in him within the company. As I've kind of spoken to some folks there seems to be some backing of his ideals and efforts so far. The bad news with respect to Boeing, if anything happens further, yes, that is going to knock the stock down. But if things can stay quiet, if they can get back on track here, I think this stock is going right back up in the air.
You know, Rob, I just got a note from our crack market expert here, Charlie Brady. We're on the verge perhaps of the first 1% move in the S&P since October. 71 trading days. By the way, up or down. And so, I mean, you know, that's been pretty quiet. The VIX today, which is a measure of volatility, up 12%. Could we be ushering in a new period of volatility?
Yeah, I mean, I think we could, Charles. I mean, but really it's more than normal, right? I mean, we didn't have a pullback any greater than 7% last year. So I think this has been pretty abnormal. And this is something I think that investors should get used to. We've been preparing our investors for this. Remember, it's an election year also. So I think this is just a preview of what's to come this year. But if you're a long-term investor, that should not shake you out of some of the good positions that you might be in right now.
All right, guys, I've got my list of names that are looking to buy in a dip. Target's one, Netflix is one, Five Below acts great today. Rob, are you looking at anything that might have acted funny that's down, that maybe now is in a point where you would want to buy it on this weakness?
Yeah, Charles. I mean, I know you're not a big fan of Chevron because it's significantly underperformed over the last several years. But when you look at that stock right now, Charles, if you're an investor, there's a couple things you're looking at. Number one, growth. But also, let's remember, a lot of people need income now. With a 10-year Treasury at 1.7%, there's not much there. Chevron's giving you 260 basis points above the 10-year, 4.3%. Extremely good balance sheet, the lowest cost of production of any of the majors. They've not had to make a major acquisition. So we think for investors who are looking for income, Chevron makes a lot of sense right here.
Okay.
Secondarily, what I would look at is Disney. Disney's a stock that we think has a great future ahead of it. Look at Disney Plus. It's blowing out what the expectations were from analysts. They've got 3 new cruise ships that are going to be coming online in the next 3 years. The stock's pulled back. If you've been waiting, this is your time to enter.
All right, and they report next week. Let's talk about the momentum in the semiconductors. Intel had a blockbuster earnings report. The semis are just mind-boggling. I mean, Scott, can they keep going? And how do you ignore something that's a juggernaut like that?
You can't ignore it. It's something that you need to take a lesson from, though, because when stocks have gotten here, specifically, as you mentioned, Charles, astutely, the chips, they get hit. I mean, Intel's overdone. We had some Intel. We started paring it back today just because, I mean, you look at the RSI, you look at the MACD, you look at all these other dorky stuff that I look at, like stochastics. Those are way off the charts.
You can just look at it with a naked eye. Pull up a 1-year chart of the SOX, and it's like, golly,
you don't even need to be a professional, Charles. Exactly. So you don't chase these, but they do come back. I do also want to note, I didn't even think about the cruise ships, as Rob pointed out. That's why he's probably on this show. I like Disney here. It's getting forgotten. Netflix is getting some love after the earnings. That's an area, too, I'd start to look. DIS.
This morning, Apple got an upgrade, Rob, to 400 from Dan Ives. Google got an upgrade this morning. Every day, there are new highs, targets on some of these juggernaut stocks. I mean, listen, maybe you don't chase them, but I'm not getting out of any of them.
No, I agree, Charles. I mean, I personally own both the stocks. We own them for all of our clients. I mean, we'd love to buy more on a pullback, but the valuations are not that expensive, and these are 2 market-dominating companies. So I'm with you, Charles. If you're in them, you stick with the name, and I'll personally be buying more if they pull back here.
Gentlemen, big week for earnings next week. Apple, Microsoft, Amazon, Facebook, Visa, MasterCard, AT&T, ExxonMobil, Verizon, Coca-Cola, Pfizer, Novartis, Chevron. Do they have earnings? Boeing, Netflix. I mean, is there anything in that group, Scott, standing out to you? Which one of those names will set the tone for maybe the broader market?
Well, it's the big guys, and it's Amazon probably first and foremost, because remember, Amazon is retail and tech with AWS, so that's kind of give you a nice little juxtaposition of two major growing sectors in the economy. Obviously, still like to see Google with some of the cloud stuff. We obviously like to see Apple, too, in there. But here's the thing, quick note on that. You mentioned a lot of great companies. You almost just rattled off a lot of our top portfolio holdings. Look for pullbacks in some of these names, because not all these guys are going to hit the ball out of the park. So when they come back in, that's when you got to add positions, as Rob noted earlier.
All right, gentlemen, got to leave it there. The Dow's off 160.